Hello there and welcome back to part 2 of the Finance 101 for Tradies podcast series across here at the Siteshed podcast. You are joining us for the episode titled Structuring Your Financial Deals, which stemmed on from the previous episode, which was called Spending Money Wisely. Please go back and listen to that one if you have not already. This is the second part, and that was the first, obviously. And then leading on for this one will be the third and final, which is going to be called Being Financially Prepared. Folks, please, if you enjoyed this podcast or if you got something out of it, please go ahead and share it with somebody. Likewise, if you can head across to iTunes and leave us a review, that would be brilliant. It does help us with our rankings, and that is all we ask of you. So go and do it. That's all. Let's dive in. The Siteshed podcast is made possible because of Tradie Web Guys, creators of beautiful websites designed specifically for tradies and contractors. If you're tired of dealing with web designers that have no idea about your industry, then head across to tradiewebguys.com.au and reach out. Like many companies from all over the place, you'll be very glad you did.
Giving tradies and contractors around the globe the tools to run a modern business. You're listening to Toolbox Talks from the Siteshed. Now here's your host, Matt Jones.
Hello, Siteshedders. Welcome back to part 2 of this series that I'm conducting with my co-host, Bill Petrovski from Hall Chadwick Chartered Accountants. Bill, welcome back.
Thank you. G'day, Matt. G'day, listeners.
Bill, we're talking in this episode about structuring our finances. It stems in from the previous episode where we're talking about spending your money wisely, in which you gave us a bit of an insight there as to how to go about spending money with the business, but doing it in a way that actually won't bury you. We've all been in situations before where I've certainly have, where I've received terrible financial advice from both professionals and associates. And it was definitely a good episode because it spoke about things that you can be doing, especially in the lead up to the end of financial year, or by the time listeners are probably listening to this one, it will probably be the new financial year. However, definitely go back and check that one out because this episode is going to tie into that. So that was part 1 where we're talking about spending your money wisely. So, Bill, in this episode, we're talking about structuring your finances. Now, this is something that to be honest with you, I have struggled with my entire business career. I have never been one that really takes to the number side of things. I've never really been overly motivated by money, and it's probably been to my detriment. Programs like Xero Accounting have been life-changing for me and business transforming. And, anything that sort of has been able to give me a simple analytics over, or data over, what's happening within the organization has been a complete transformation to me. So I'm really interested to see what your feedback here is on, how to structure finances, how to set goals, how to map these things out. Because I can tell you now, like when you go through TAFE as an apprentice, as a tradesperson, there is absolutely nothing that they teach you about structuring finance, about how to spend money wisely, how to be financially prepared. It's basically, all right.
They don't talk to you about cash flow and taxes?
No, they say, so you swing a hammer. Okay, good. Here's your ticket. Off you go. Now go make your money. So it's not a good situation. And I suppose I just want to say thanks for sharing your wisdom on behalf of this, because I firmly believe that if people that are going through apprenticeships, and especially people that are entering into their own business, they really need to equip themselves with knowledge around finances, because it might sound cliche, but it really is the backbone of any business. And if you're not making money, you're out of business.
Yeah, that's right. I think the key thing there is, as you pointed out, is it's knowledge. It's knowing what you spend, when you spend it, and how you spend it. And whilst things like Xero and all these new cool applications out there that make your life easier from keeping a track of how you spend money, what your revenue is, and your cash position, etc., that's all great. But ultimately, if the reports or information coming out of those tools is not good, well, you're not in a position where you have knowledge of knowing how to spend your money and how to structure your finances. So really, knowing that you're getting quality data out of your system, out of your whatever that might be, is first and foremost. So with that, you can make informed decisions about how you structure, I guess, tax payments or finance payments if you're going for debt, if you're trying to grow the business, what you've got up your sleeve capacity-wise to direct towards growing the business. And, the old adage that they say, cash is king. Well, actually, what I say is cash flow is king. Because if you know your cash flow each week, each month, and ongoing, you know what you can spend and what you can't spend. And if you've got that because you've got good information coming out of your system. You use that to make good business decisions.
Interesting. So I know when you're starting off in business, like there's probably a lot of people out there listening to this that are in a similar boat. Obviously you're very conscious of spending money, and you try and, I suppose, bootstrap as much as you can, which is good and bad. I found that when I was in that situation, I would cut back on things like, trying to pay an accountant, for example, on how to help me manage this sort of stuff, because I figured I could do it myself. But I think there's certain things that I've seen, through my years of running business, that you just can't afford to do yourself. And, investing and getting the right help is so important, especially in a startup phase, because there's so much bullshit out there, and there's so many people that will tell you things, and you've got to be realistic as well I think as a business owner, you've got to be realistic as to where your time is best spent within your business. And if you're spending all your time trying to learn how to, become an accountant or a bookkeeper, it's taking you away from doing what's actually making you money, which is not smart. So although it might seem like you're saving money, it's actually costing you dearly. You're probably doing it wrong anyway. So there are ways that you can, I found anyway, there are people and companies that will help you, I suppose, get the right help and use the right products and use the right tools in a way that won't break your bank. You just need to kind of have the balls to approach them and ask them, if they've got a program or a plan or something that could facilitate, perhaps a different style of investment, instead of maybe paying, every quarter for your tax with your accountant, or every year, is there a way you can pay it off weekly or something like that makes it a little bit more digestible? Have you got any advice in that regard?
Yeah, look, I mean, we use a whole bunch of software and applications, but again, I'm no expert at what's out there, and that world changes so regularly that you got to get the right guy who's a specialist in that space to come and talk to you about what's important for your business. And, here are the options of what's out there. There's 50 different options, but I think these 10 make sense. And out of those 10, I'll tell you why these 5 are probably the top choices. And let's decide on this one and this one. And, I'm no expert at that, but I know well enough that we've got to get the expert in, whatever the case may be. I'm not going to try and fix my own lighting problems at home. I'm going to get the expert in because that's not my domain. And one, it's dangerous. I'm not good with my hands. And two, I don't know what I'm doing there anyway. So I guess in all those things in business, there's experts in many fields, and getting the right people in for the right job is what's most important, and getting it right at the beginning, because you can trudge along there, and I've seen it many times where people try and save $1, especially initially when they're starting out in business, and they haven't set things up right. They haven't done things correctly, and they're 12 months down the track, and they go, oh, okay, well, now I'll bring in the specialist. And the specialist comes in and says, well, you've been doing it wrong for 12 months, and we're going to spend triple the amount of dollars to fix up what you've done wrong for the last 12 months.
Yeah, it's like trying to unlearn your golf swing.
Yeah. That's a whole different podcast, I think.
Bill, what about things like structuring deals, loans? We talk about finances. I think it's all relevant. How do you, it's so important that you're structuring those kind of things the right way, because, that could be the difference of hundreds of thousands of dollars, depending on what it is you're talking about. Commercial properties, commercial deals and equipment finance, all that kind of stuff. There's so many options out there when it comes to, I just know I've just been through that process myself of, buying a new car and bought it through the business, and had to figure out what type of finance I wanted to take on it. And I want to take finance on it. I figured out I had to, because I needed to get finance because of the business and the credit history and all this kind of stuff. Like, it's all stuff that I had no idea about, What are some of the things that you see commonly occurring, or some of the instances that you see commonly occurring in regard to those things?
Yeah, so when it's some larger purchases there, for example, assets like vehicles, equipment, or even property, really structuring comes down to, again, just getting the right advice. So, talk to your accountant, talk to your finance broker. They know all the products that are out there and all the different rates, and which banks or which financier is going to, have appetite to go and lend you money on a car or that equipment, versus going to walking into your bank to someone who's not your relationship manager, who doesn't really know your business, and try and get something that's going to be suitable for your business. So again, bring in the right person at the right time, and really they're the times when getting the right advice is going to be absolutely key, because you're embarking on a transaction or a deal that's going to be a long-term impact on your business. So again, whether it's property, asset, vehicles, etc., those things are important to your business. You've got to get them right at that time. So you've got to make sure you've got the right person involved alongside you, who's on your team, who's going to get you the best outcome. And again, back to what I was saying earlier, what you need the information as well as them to say, I think my business, and they agree that my business can afford to, pay this off over 5 years, or is it 3 years, or I can save up enough money in the next 6 months to have a deposit for that property, right? And how do we then, on a disciplined approach, make sure that we do that and get everything ready so that we can structure that debt? What's the bank want to see in order to approve us in advance so that we can go in confidently to do that deal?
We interrupt this podcast today to talk to you very quickly about Tradie Web Guy's content creation program. That program has been designed specifically for trade-based organizations as a way that you guys as trade business owners can start creating content that enables you to engage better with your customers and your potential customers. It will enable you to build trust and build rapport, because what you're doing is you're investing in educating them. Biggest problem that we see with our customers today is that they're not regularly updating their websites. And that's a problem because, first of all, the search engines are looking for that. And second of all, potential customers are also looking for it. Tradie Web Guy's content creation program has been specifically designed to help you get regular, relevant content on your website consistently every month. We know that it's hard when you're out there on the tools, and we know that sometimes you don't always have the time to be able to do these things yourself. So we're taking it off your hands for you. It's a service that we're offering for you guys. We want to make sure that you're getting this done because we know how important it is. Anyway, head across to tradiewebguys.com.au/content, fill in the form, and one of our representatives will come back to you. Isn't that, it's interesting, isn't it? I recently have been down this exact path for the vehicle, but I was lucky because the gentleman that I was dealing with, Sean, was brilliant, and we speak about it in one of the other podcasts. But just to recap, we basically he was saying, and he's a broker, and he was saying that the problem is in so many instances when you're going to get a loan for a car, equipment, a home, whatever it might be, if you haven't got pre-approval for that loan, if somebody goes to apply for it and you don't get it, then it puts a massive cross on your credit history. And if you get a couple of those, then you effectively can't get a loan, or something to the effect of that. I'm paraphrasing, but is that pretty accurate?
Yeah, definitely. It doesn't, and especially in today's lending landscape where banks find any reason why not to lend you money, even having a default for $100 on a phone bill that went missing, that, from 3 years ago, that default is going to impact on what you can borrow, even though it's such a minor amount. And that's the kind of detail that banks are going to these days, or any financier is saying, well, what happened with that $100? Why didn't you pay it? Is there a reason why it went to legal and you got a default on it? Well, your excuse of, I moved address and I wasn't there when the bill went there, is not good enough. They're just going to look at that and going, well, okay, your system's not right. Why didn't you notify all your suppliers or your banks and all that you moved address? And, why didn't you have a PO box, for example? So these are all the things where, again, when you're specifically going for a significant transaction such as borrowing money for an asset or property, you got to do all the due diligence yourself as if you're the bank. And you don't know all the steps they go through, but obviously a broker does, so they can pre-prep with you saying, well, these are all the things they're going to ask. Let's make sure we tick all those boxes such that when we go into the bank, whoever that might be, we know that we've got all the information there, it's accurate, it's readily available. Now you look like a person or a business that the bank wants to lend money to because you're pre-prepared, you're organised, and you've got all your shit together.
Isn't it just ridiculously irresponsible of some of these lenders, that the finance companies, for them not to consider that or just totally disregard it? I mean, I was just blown away. Admittedly, it's completely ignorant, but I've always admitted to being relatively ignorant when it comes to this kind of stuff. So I was amazed that there's not more legislation, or there's not anything that really there's no there's no standard to abide by. Like, you can go to someone, you can apply for a credit card, and if you get knocked back, bang, it's on your credit history. It's like, what? Like, you can apply for, anyone can apply for a credit card. You can do it online within 3 minutes. And, you know, if you get rejected, then that mark stays on your credit history. Like, how's that fair?
Yeah, and that's only going to become harder because all these things are reported by the banks. And I think there's new legislation coming in from 1 July, actually, where the banks don't only report bad credit, so people with defaults, but they actually also have to start reporting from 1 July, I believe, people with good credit. So I guess there is legislation coming in to right some of those wrongs, maybe.
Right.
But again, you know, the credit comes in many forms, whether it's bank debt, credit cards, you know, borrowing from a mate. The other thing is, I mean, when you're starting out, you're probably putting your own money in. Right. So you are a lender to the business, or you're providing your own capital or equity to the business. So, you know, you want your money back out. You don't want that money in there forever. So eventually you've got to start saying, well, how do I draw my own money back out too? Because that money, I could be doing something with it, right? There's an opportunity cost of that money. What I've chosen to do is start my business with it. But eventually I want it back because I want to go buy a home. I want to go and invest in property. I want to buy a share, whatever it might be. You've got to factor your own money, your own capital, as well as outside debt from a bank.
I can imagine there'd be so many people listening to this right now, and they're saying, hang on, so the money I put into business at the beginning I can actually get back? Like, what? I'm sure people would just be thinking, surely it's the same shit. It's my business. It's my money. I put it in, and yeah, good, off we go. But and this is something that I had no idea about until I learned about things like director loans and all this kind of stuff. Like, I'd never heard of it. But I mean, you don't know what you don't know, right? Like, how people don't get taught this stuff. I mean, you do.
That's why we're going to get it right at the beginning. You know, get it right at the beginning instead of 12 months down the track, because you're going to pay double and triple to get it fixed up. And the same thing goes for, I guess, a lot of our businesses out there. You know, someone who's tried to do that deck themselves, or someone who's tried to paint that house themselves, it looks shit.
Yeah.
And you can tell it's been done yourself, and it's going to cost double to get it fixed up later on. So, you know, I guess again, it just speaks to get the right person in at the right time when you need that advice, and structure your finances in the right way, knowing what you're trying to achieve in the future months and years. So
fundamentally, Bill, when we're talking about structuring our finances, and let's talk about, say, a relatively new company, they're just getting up and running, and they have no idea really what they should be tracking or what they should be monitoring, what they should be structuring, planning. What are some of the fundamental things, even at a base level, that all businesses should really be considering from the get-go?
Okay, so really knowing what your costs are on a week-to-week basis from the get-go. You want to know, I don't have $1 of revenue yet, but I want to know what I'm spending between now, next week, the week after, and generally I like to call it the 90-day cash flow. So really knowing what does that look like in the next 90 days. So whether I'm a new business starting out or I'm an established business, you should always know, what money do I have in reserve? And if I didn't receive a single dollar for the next 90 days, how can I last that 90 days without getting another dollar in the door? Do I have that up my sleeve?
And so would you be considering in that regard everything like, I mean, I was taught this earlier in the piece by a colleague of mine, which was great, you know, how to really get a good overview as to what your expenses, this is back when I was plumbing, mind you, get a good overview as to what your expenses are so that you can ascertain your hourly rate and really use all of those expenses, phone bill, electricity, vehicle, petrol, tools, equipment, all that kind of stuff, like that all will add to your hourly rate. Well, it should, I should clarify, add to your hourly rate. And it's amazing when you actually do that exercise and you go, holy shit, I'm at $250 an hour, and that's just to cover my cost. That's just to cover my wage, and you know, and like it's crazy. Like people think, you hear all this crap in the media about, oh, this plumber ripped this old lady off because he charged her $100 an hour. I'm like, $100 an hour? Are you freaking kidding me? $100 an hour? You're dead in 2 years.
Losing money.
Yeah, completely.
So that's, I guess then you come down when you start drilling down to the detail, as you've said there, you've got your direct costs. So the direct costs of doing that particular job or that particular contract, and they're pretty easy because you generally cost them out when you're quoting. Then there's your overhead. So your overhead is the cost that you have regardless of whether you've got a job that you're working on or not. And I've got to pay my staff, I've got to pay my rent, I've got to pay the leases or the vehicles or whatever the case may be. And the one that commonly gets forgotten is exactly as you've said there, is your time. Your time is an overhead here. So if you're not compensating yourself for your time and you look back at the end of the year and say, well, okay, 12 months is gone and I've made 80 grand, that's great. Well, actually, I could have made 80 grand working for someone and had no stress, none of these concerns. 80 grand's not enough. It's got to be double that. It's got to be triple that to make being in business worthwhile, because unless I'm making double the amount of that or triple that amount, I might as well just go and get a job and work for someone. So as a business owner, you always got to think about what are my direct costs? What are those overheads I've got to cover that are fixed and I've got to pay for them anyway? And at the end of the day, you have to earn money not only as a salary for your time, but also profit. And having all that information again up front, difficult when you're starting out, and obviously it's going to be a lot more to consider when you're starting out with startup costs, etc. But for established businesses, that's something you should be looking at all the time. And like I said, I always relate it back to this 90-day cash flow. And do I have enough in the bank today to cover me for the next 90 days? If I don't, I've got an issue. I either got to go chase a debtor, I've got to go win a new job, I've got to cut some costs out of my business. Or if I've got more than 90 days worth of cash in my account, well, that means I've got some money to spend and invest in my business. So whether that's a new asset and whether I get debt for that and pay it off over a year, 3 years, 5 years, or whether that's a new staff member, whether that's some advertising, some marketing, some online tools, or some other tools that are going to make my business more efficient. You know what you can spend and how you structure that finance.
Yeah, okay, brilliant. Well, mate, I think that pretty much wraps that episode up, unless there's anything else you wanted to add.
No, that's basically it. I think that covers a fair bit.
Love it. So we're going to come back with a third and final episode, listeners. We're going to be talking about being financially prepared, where we're going to talk a bit about compliance and things like that. And then that will close it off. So, Bill, thanks again for your time. And for the listeners, stay tuned for the following episode.
Thanks, Matt. Thank you, everyone.
Thank you for listening to another episode of Toolbox Talks. If you're liking what you hear, then you can head across to thesiteshed.com, where you can join our community by signing up to our Toolbox Talks. You'll get sent a weekly notification, which is basically a highlight of everything that we've spoken about during that week, along with any other industry news that may be relevant or specific to the trades. If you're enjoying the show, you can head across to iTunes, Stitcher, or SoundCloud, where you can leave us a review. That would be fantastic, and all the reviews get read out in the show. Likewise, if you have any friends or colleagues that you think would benefit from the show and the episodes that we create, then please go ahead and share it with them.